Hey there guys, Shingirai here again with another update on portfolio performance over the past week. On a 1-week basis, 7 out of 10 of the CBAM portfolios outperformed their respective benchmarks in a relatively risk-on week where we saw returns ranging from CBAM 5 V2 returning 2.09% down to CBAM portfolio number 1 returning 0.54%. There was an era of optimism last week in the markets, which would see traditionally interest rate sensitive asset classes doing relatively well versus peers, and that would see Pictet Clean Energy up 5% on a 1-week basis, and the US market obviously much tech driven up 4% as well. And then we saw that China reopening trade continuing to play out with Bailey Gifford China up 3.69%. In terms of detractors from performance, we continue to see some tightening cycle there from the Reserve Bank of India, with interest rates expected to peak at 6.75%, obviously, and growth concerns in the Indian economy leading to that detraction on performance of about 3% on the week. And also we saw some headwinds for Hypnosis as investors begin to look for more deal flows going into the Songs Trust Fund as well, and that would see Hypnosis down 1.61%. And finally, on a risk-on week, we saw those safe haven European government bonds down 0.53%. Flipping over to a quarter-to-date basis, 8 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 2.83% for CBAM 1 up to 5.05% for CBAM 5 V2. The risk-on sentiment continued to be the theme coming into the fresh quarter despite some challenges we saw in the first 3 quarters of the previous year. But we do continue to see that China trade really beginning to speak, and you'd see MSCI China up 15.68%, down to Columbia Threadneedle China up 12.34%. But most notably, we also see some European equity positions and US equity positions being in our top sort of 10% performing funds on a quarter-to-date basis, as investors' risk-on sentiment begins to really permeate through the markets. In terms of detractors from performance, that story on India continues to be a deterrent from investors, and you would see more attractive returns from areas such as China, also in the emerging markets, seeing outflows out of India, and that our equity position down 3.94% on a quarter-to-date basis, and also Hypnosis Songs Trust down 1.16% on a quarter-to-date basis. Then we also saw some weakness there for our JP Morgan US equity position, down 0.42%. But I would note again, on the quarter-to-date basis, we did see a 2.66% strengthening of sterling, which would be a headwind for our US equity positions, which would be obviously earning in dollars. We also see this week quite busy in terms of macroeconomic data. We did see some unemployment figures coming out from Europe indicating a slight peak in unemployment. But then again, we do begin to see signs of inflation cooling off with a lower reading for CPI today. And in terms of unemployment as well, non-farm payroll from ADP coming out weaker than expected at about 108,000 jobs added for the month in the United States economy. And then also we look forward to this evening's interest rate decision coming from the Federal Reserve Bank in the United States, and also some interest rate decisions coming out on Thursday from the European Central Bank and the Bank of England, which are both expected to further increase interest rates by another 50 basis points each.